What's up, everyone? It's Caddy with MoneyVest. So in this video, we are going to be talking a little bit about Walgreens. Walgreens reported their earnings today, just a few minutes ago, and they have the earnings call coming out in less than an hour. So 8:30 a.m. Eastern is when the earnings call is going to take place. But I wanted to break down the numbers, the earnings per share, the revenue, and the forecast for 2024. Didn't read anything about the dividend per se. There wasn't anything in the press release that resulted in a dividend cut, so that's good because Walgreens is kind of considered as a dividend aristocrat. And right now, pre-market, the stock is down, I think, a little bit over 2%, just close to 2%, trading at $22 per share. And of course, low 20s has been a long-standing support for Walgreens, and not to mention that it's also obviously hitting its 11-year low, coming down to low 20s at the moment, trading literally at those prices. And right now, a little bit bouncing back higher from those levels. We've got a new CEO coming on board here very soon, and from highs of well over $75, Walgreens continues to be lower, down almost 70% from its all-time highs. So hope you guys enjoy this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. And again, links going to be down below for our Discord, for our Patreon. We are producing a lot of individual stock reports, binds alerts, options alerts, trade ideas, a lot of trading view charts, and of course, members-only private videos. Everything's going to be included with the link down below, and we'd love to have you on board. So profit outlook comes in short as demand declines for COVID vaccines and tests. And we already knew that, what Walgreens is dealing with is a huge transition, right? They're moving towards a healthcare business. They're also very much reliant, or up until a couple of years ago, they were very much dependent on the pandemic and, of course, COVID-related sales, which obviously the company came in a little bit lower, and along with higher tax rates and lower sales and leaseback contributions offset earnings growth. Walgreens also sees revenues of $141 to $145 billion, and that is going to be that number for 2024. And Wall Street was expecting $144 billion, so that's kind of like in line with expectations. But EPS expectations came in at closer to $3.50. And the analyst estimates were $3.72. So if you take a look at non-GAAP earnings, 67 cents per share versus 69, and revenue came in at just over $35.4 billion and versus expectations of 34.7. So we got a beat on revenue, a slight miss on EPS, and then inline revenue guidance and slight miss on EPS guidance as well. On a GAAP basis, though, the company did report a net loss of about $180 million with 21 cents per share net loss per share. And that compares to net loss of $415 million same time last year and a net loss per share of 48 cents per share. So definitely it is narrowing in a little bit, but of course it's still generating a loss on a GAAP basis. But non-GAAP, Walgreens is still generating somewhat decent profitability. Now, they did book sales of $35.4 billion in the quarter, which is up roughly 9% year over year due to growth in U.S. retail, pharmacy, and international business segments. And Walgreens has made significant investments to transform from a major drugstore chain to a large healthcare company. And that, of course, transition has not worked out all that well under Roz Brewer, and that was also a surprise exit from her. And as a result, Tim Wentworth has come on board. He's going to take over on October 23rd, which again, we'll talk about them in a little bit. So, but the pharmacy chain is facing a number of challenging situations in its transition, including a profit squeeze due to softer consumer spending, declining demand for COVID products, and patients emerge from the pandemic as well. And Walgreens is also facing an open revolt among pharmacists and pharmacy technicians, several of whom have staged a 3-day walkout this week to protest chronic understaffing and other poor working conditions, which obviously I think they kind of organized this walkout on Monday, and I think they've kind of did that on the last 3 days, and it's also putting some pressure on Walgreens' overall business. Of course, that's going to show up in the future earnings. Now, Walgreens' U.S. retail pharmacy segment did generate sales of $27.66 billion, up over 3.7%, and comparable sales at individual locations up 5.7%, and pharmacy sales for the quarter also increasing 6.4% within the year over year compared to fourth quarter 2022, and comparable sales, as we mentioned, up 9% year over year. So a lot of that came from price inflation and branded medication, not so much from the actual supply, because that was, I think, down closer to 0.5%. Now, when it comes to Village MD and CareCentrix, I think that's really where the focus needs to be, because that's where the transition is happening for Walgreens. That's really what they want to focus on. That's what they've been investing on. So primary care provider Village MD includes urgent care providers, saw a revenue growth of 17%. So that's, again, very, very good. And CareCentrix also saw an increase of 15% due to additional service offerings and expansion into additional markets as well. But the healthcare segment still took a loss of $30 million in the quarter before interest, tax, and depreciation, compared to a loss of $103 million same time last year. And they're actually expecting a break-even EBITDA for 2024. So this is the earnings per share guidance, 320 to 350. So if you compare that to where we are right now, if you take that mid guidance to 345, we're looking at an earnings yield of over 17%. 17% earnings yield for Walgreens, considering the fiscal year 2024 guidance, which is absolutely ridiculous. And not to mention the dividend yield is a little bit over 8.5%, with the underlying earnings growth more than offset by lower sale and leaseback contribution. And they're also expecting U.S. healthcare business adjusted EBITDA, as I mentioned earlier, to break even at the midpoint of the guidance between negative $50 to positive $50 million. And they're not providing any guidance beyond 2024 and continuing to evaluate macroeconomic trends and challenges as well. Now, they have appointed a new CEO, so October 23rd is when Tim Wentworth is going to come on board. I've already done a video on this earlier in the month, and he was recently, founding CEO of Cigna's Health Services Organizations, Evernorth, overseeing healthcare provisions, pharmacy solutions, and benefits management. So kind of coming in with that experience, and he's also grown that company to become, something that's over $100 billion in revenues, right? And Wentworth has extensive experience in the pharmacy side of the business, and his aim is to improve healthcare services, lower cost, and support patients as well. And Walgreens has a differentiated model with the power to build on the company's pharmacy's strength and trusted brand to evolve healthcare delivery is also what Tim Wentworth mentioned, right? Because these are the first comments we're getting from the new CEO on the company. So I think this is going to be very, very interesting how this all plays out. Now, is Walgreens out of all the troubles? No. Is Walgreens still dealing with a lot of challenges? Yes. I think Tim Wentworth has definitely got a lot on his plate. He's going to have his work cut out for him when he takes over on October 23rd. And he also goes on by saying, and I quote, "I believe Walgreens is well positioned to deliver more personalized, coordinated care and achieve better outcomes at lower cost as well." And prior to joining Cigna, Wentworth was CEO at Express Scripts, a pharmacy benefit manager in the U.S. as well. So he's coming in with a lot of healthcare and pharmacy and benefits experience, which I think is going to be huge for Walgreens over the long term if executed well. Right? That's the real question, if executed well. So look, given the guidance on earnings and given the guidance on dividends and cash flows, Walgreens' valuation is straight up cheap, right? It's just no doubt. It's incredibly cheap considering that it's trading at, 17.5% earnings yield, which is just unheard of. And then, of course, we're looking at over 8.5% dividend yield and free cash flows. I'm not exactly sure where that ends up. A little bit, take a look here. Statements. Let's just go over to free cash flows on an annual basis. We are looking at $2.1 billion in 2022. Which obviously has declined quite a bit from $6.97 billion in 2018. But even at $2.17 billion and the company's worth 20, that's a 2.7 divided by 19.51. We're looking at a 13.8, almost a 13.9, 13.8% free cash flow yield, over 17.5% earnings yield, and a little bit over 8.5% dividends yield. But of course, they've got their own challenges. The balance sheet is not the best. However, it is comparable to that of CVS and UNH and some of the other companies as well. But the real question remains on this relevancy issue, right? Is Walgreens relevant over the long term? And how quickly can the business pivot to being more profitable and, of course, consistently growing revenues and earnings and cash flows? And Tim Wentworth, like I said, has got huge challenge in front of him when he takes over Walgreens on October 23rd. So that's where we are. And again, downbeat 2024 profit forecast. That's one of the reasons why the stock is slightly lower, and that's because of the vaccine demand kind of shrinking a little bit. Q4 loss did narrow on higher sales. So I would say the numbers were kind of mixed. We did get a decent guidance. I'm not saying it was super attractive, but even at 340, 350s, it's, trading at 17, 18 times earnings yield, and the dividend did not get affected. So that was kind of like my biggest fear, is that maybe, just maybe, it's possible that they start to cut the dividend, but nothing that I've read online suggested that they'd cut the dividend. Nothing in their press release they mentioned anything about the dividend. So that was actually a good thing, in my opinion, kind of subsiding that fear. Now the only question is, can they actually turn the ship, and start becoming more efficient in the way they run their business? So that's going to be kind of like a wait and see approach. But overall, I think the numbers were okay. Not terrible, but not great either. The guidance was decent. Revenue beat was very strong. But of course, the future is going to very much be dependent on what Tim Wentworth brings to the table with respect to Walgreens. So hope you guys enjoyed this video. Let me know your thoughts down in the comment section below. What are your thoughts? $20 is going to be that support level for Walgreens. It's been like a 11, 12-year low and resistance all the way up to $29, closer to $30 for this company. As always, if you enjoyed this video, found it helpful, make sure that you drop a like, subscribe to the channel. Link to our Discord, Patreon is going to be down below. So always, happy investing. I'll see you all in the next video.